Good morning, traders. It is Wednesday, March 12th, and we had the CPI this morning. I believe that we are going to find support in here somewhere. There's going to be a short squeeze. We just needed some decent news for the market to stop its trend lower. So, how do we trade it? I'm going to answer that in just a bit. We've got to make sure that we have support. So, that's going to be today's theme. Before I get started, I always like to review my previous picks. That's how you know if this system is working. If you made money on my previous picks, please give this video a thumbs up. I'm trying to reach as many people as I possibly can. So doing that really helps my YouTube channel. Please subscribe to my notifications. I'm going to be doing these shorter videos, and I don't know when I'll have time to do them. If you're subscribe to the YouTube channel and you have your notifications on, you'll always know when there's a new video posted because I always give you a pick. So JPM, that was my short that I highlighted Sunday. I didn't know how the market was going to open Monday. I like the setup on a D1 basis. Stock was here probably 236 on the open Monday. Yesterday, Tuesday, it hit about 226. So a $10 drop in 2 days. Lots of money to be made there. So today, I'm going to actually give you a bullish pick because I think the market sell-off is overextended. But I'm going to put lots of conditions in there because trading bounces is not what most of you should be doing if you're novice traders, if you're swing traders. This is merely a time to start taking some profits on your short positions and not to actually get long and get cute and try and play this bounce because it's very, very tricky. So we'll get into trading bear markets. Many of you probably have not done that previously. So JPM, beautiful pick. Let's take a look at the D1 chart. You can see that nice big sell-off here. And now we're starting to bounce off of the 200-day moving average with the market being relatively overextended. This is a good place to take your gains into these big, deep air pockets. That is how you trade a bearish market. That is how you trade a bearish stock. When the move is very steep and very sudden and the percentage losses on the stock are huge, you know that it's going to find support somewhere along the line. And when you've got a big drop like this, you have to add quickly because you're not going to have a chance to add along the way. At the 100-day moving average, you had a chance to add on that breakdown, but now you're really just in profit taking mode. So you start to see signs of support. You start to see this big, deep air pocket. You know that buyers sooner or later are going to be coming in. You take profits and you don't try to time the bottom. That's probably the most important thing that I can tell you. Because what happens when you have a big drop in the stock or a big drop in the market is that option implied volatilities explode. If you are long puts, you're going to benefit from that happening. And so even if you don't pick the ultimate bottom in the stock itself, you're going to be picking the bottom in, you're going to be selling those options when their implied volatility is at their highest level. So the price of the option is probably going to be pretty close to its peak, even if the stock drifts a little bit lower because of that huge explosion in option implied volatility. And if you leave a little money on the table, so what? You're going to be super happy that you took profits. If you wait for that bounce, the bounce could be super tall, big gap up on some kind of news, and then you're going to be upset because you didn't take those massive gains when you had them. And so the market takes the elevator down and the stairs up. So now we're kind of in a position after a big market drop to find support. So let's take a look at what's going on with the market. First of all, we had the CPI came out today, 0.2%, better than feared. So inflation is starting to come in, and that's good for the overall market. We have the FOMC a week from today. Central banks around the world have been easing They're more fearful of the economic slowdown that they see than they are of inflation. And in China, PPI has been coming down for a long time. I believe 25 consecutive months, producer prices have fallen in China. CPI just fell minus 0.7% for the first time in China, I believe, in well over a year. So that's a sign that prices are starting to come in. Oil prices are starting to come in. As economic conditions soften, as consumer demand softens, those prices are going to start to come in. I personally believe that inflation, it might be a concern here in the US over the course of the next few months as those tariffs are enacted and as prices adjust higher. But ultimately, I don't think inflation is going to be a long-term problem because we're going to go into a recession. That's what the Fed said they needed to see to tame inflation. And it didn't happen from 2022 through 2024. And now we're finally starting to see it manifest. So I believe that inflation is going to come in line. And you might be thinking, oh, excellent. That means that the Fed is going to be easing and the market's going to love that. Well, the Fed is going to be easing, but when they start easing, it's because economic conditions are deteriorating. And so I don't see that as a bad news is good news scenario. Bad economic news is good news because it means that the Fed is going to be easing. Absolutely not. It's a very, very slippery slope. And central banks in Europe, the ECB, in Asia, the PBOC, they have been cutting rates for months to no avail. Economic conditions are continuing to slide, and that is not good for profits, and that is not good for the market. So be careful what you wish for. So I don't think inflation is going to be a problem, but I do believe that lots of credit and a global slowdown, that is going to be a longer term problem for the market. And so what that means to us right now is, as traders, we are timing short-term events. Go into a daily chart, take a look at where we're at, and you can see this very big, steep decline. At some point, the market is going to bounce. We finally got the first round of decent news, and how the market responds here is going to tell us if we can get a meaningful bounce. All right, so let's take a deep breath here and think about what it is that we actually wanted to do. From this point right in here, we suspected that the market was going to be selling off, but we knew that the first crackdown was going to be very difficult because buyers are still conditioned to buy dips. So we get this choppy back and forth. Buyers and sellers are paired off. Market can't get through that previous high, makes a little marginal new high, and then wham. This is where we start getting some news that ISM services, ISM manufacturing, GDP, all those things are starting to slide. We get softer jobs reports. So now all of a sudden, everybody's worried that, hey, maybe that recession is actually going to happen. And after a long bull market run, this sell-off is going to be relatively choppy initially. And then it gains traction. Well, this drop is what we've been waiting for. So the table is set. When we get these deep air pockets like this, that is when you need to take gains on your short positions because something's going to come out that's going to spark a big rally. Maybe the Fed next week says, hey, we're going to cut a quarter of a point. Maybe they don't do it next week. Maybe they do it at the next meeting. Well, June was expected to be the next rate cut. Maybe they move that timeline up. Instead of doing 2 rate cuts this year, maybe they're looking to do 3 rate cuts. So there is going to be a bounce in here, and that's going to spark some short covering and a short squeeze because shorts have been adding. And when you get that big bounce, they start to take profits. and that starts to fuel the rally. You also get some bullish sentiment in there that fuels that market rally. Let's say through the 200-day moving average, this 585 level is one that I'm watching. I think that's going to be a pretty good resistance level. It's kind of between the 100-day and the 200-day moving average. Ultimately, what I want to see is that this bounce has a very difficult time lifting off and getting above the 200-day moving average. But once it does that, the bounce maybe unfolds over the course of a week or two. It starts to hit resistance before it can even get to 585. What if it gets all the way back to the 100-day moving average? That's a little bit taller than I would like to see. How do I know that? Why do I feel that way? What's the analysis? What's the rationale behind that? Well, the rationale is that if you take that high and that low, we really want to preserve the halfway point of it. And this works for long red candles, whether it's on an M5 chart or on a weekly chart. This is going to be on a monthly chart. Pretend that it is a monthly bar. I guess I can just go in and show you what that would look like one of those. Well, when you get a long red candle, you want half of it preserved, all right? So in this case, the bar just happens to be a 1 month time frame. And when you start retracing more than half of that distance, then you know that on that snapback rally, buyers were actually fairly aggressive. So this is where you start expecting to see that resistance. For novice traders, keep your eye on the ball. Do not get cute. Do not play this bounce. All it means to you is that you're taking gains on your shorts and you're going to wait for this bounce to stall out. And you're going to wait. And then when it finally starts to crown, we're going to be able to see the character of this bounce. We want mixed, overlapping candles. That tells us that sellers are always in control. We don't want to see stacked green candles, and then eventually we want to see tiny compressed candles when we get that. And when we can't get through that halfway point, that midway point, that's going to be a great sign for us that we can start entering bearish short positions for swing trades. And excuse me, when we break below that 200-day moving average, we want to do it with boom, gusto. Then we can add. And then we would expect to take out this recent low and go even further below it. That's what I see playing out. And so the difficulty in playing a bounce is that, first of all, buyers up in here have been taught a lesson. Okay, now I'm starting to see breakdowns below major support levels, 200-day moving average. Look at the 50-day moving average. The purple line is starting to descend. That tells us that on a 50-day basis, prices are moving lower. That's a bearish sign. And so now buyers are not going to be as aggressive. And what's going to happen is you'll see an initial bounce. Maybe we get that today. The House passed the continuing resolution. Now it's going into the Senate. It's going to require some Democratic votes. It's a step in the right direction. Is it going to pass? I don't know. There's a chance of it. We also had a agreement by Ukraine to honor a ceasefire. Is Russia going to agree to it? Don't know. It's a step in the right direction. We've got a few little things, CPI. We got a few little pieces of information that could spark some buying. So at this stage, we're looking for this little bounce. We'll get into the 5-minute chart in just a second. This bounce, you want to day trade. Okay, if you're a short-term trader, day trade it, take your profits at the close. Thank you very much. The reason for that is that you are always going to get a retest of this support. The programs will come in and they'll try and slam the market back down. And if you get too aggressive on this first bounce, and that is a big mistake that most traders make. Oh, goody, goody, goody. I've been waiting for this bounce. Oh my gosh, if it can just get back up to this level, think of how much money I'm going to make. And so they come in and they overload. because this is the one. Oh, I've been waiting for this. This is that deep oversold bounce Pete's been telling me about. V-bottom capitulation low. Yeah. And then what happens is a day or two from now, you're going to get wham, this big second drop. And that is going to be the test. And when that finds support, then you can trade this bounce with more confidence, because then you will have a higher low double bottom, and you want that. You don't want to test that low or go below it, because that'll tell you that the selling pressure is still very, very heavy. And so not on this first bounce, but on that retest and support above this low, then you can get more aggressive with your very short-term bullish trades, knowing that this might only last a week, maybe two tops. And then when we start getting up close to this 585 level and we can't quite get above it and we start rolling over, that's when you'll start looking for stocks to short. And the stocks that you want to short are the ones that have broken down below a support level like this. I'm going to ask you to pretend that we're looking at a stock and not the SPY. And while the SPY is rallying up here to test this 585 level, what's the stock doing? It's inching higher. It can't get through the 200-day moving average. It barely bounced. That tells us it is weak relative to the market, and that sellers are keeping a lid on that stock. They're trying to unload as many shares as they possibly can while the market is bouncing. And as soon as the market rolls over, whoosh, the stock rumbles. That's what you want to be looking for over the course of the next month. Okay, so first bounce, let's say it's today. I'm going to give you a bullish pick. Let's go find one. Get out of that position today. Do not hold it overnight. You will lose money on that retest because you will not have the staying power. You will not be able to take the heat on that next test of support. You like that stock today? Great. Keep an eye on it. You want to see on that retest of the low for the market, you want to see that stock holding up, boing higher. It wants to go. It barely even pulled back. And so when that higher low double bottom forms for the market, then you'll be able to enter that stock position and hold it for a day or two with much greater confidence that, yes, buyers are lined up in this name. And when the market does bounce and get through that 200-day moving average, this stock is going to take off. It's going to perform better than the market even. So how do we find these stocks? Let's go in. Let's take a look at some longs. But first, I almost forgot to mention, I told everybody in the chat room, this opening gap higher, it is going to be tested. It will be tested. So you do not have to worry about a gap and go. When you get this pullback, start looking for strong stocks and wait for signs of support. So we filled the gap almost here. Okay, just about. Actually, the close was down here. So we didn't fill the gap, but that's okay. We got a couple of long bullish candles. And hey, the CPI was good. We had all the great news of potential ceasefire in Ukraine. We had the House passing the continuing resolution. What gives? Selling pressure. That's what gives. There's still a lot of sellers out there, and buyers want to make sure there is support before they stick their head in this news. And so we're going to probe, we're going to find that support, and then we have a chance to grind higher. That is what I'm expecting today. And how did I know that this is how things are going to play out? This is what the market did before the open. So you get this nice little grind higher here, everything's good. And this is your 8:30 candle, 8:30 Eastern time. Wow, look at that. What happened? CPI came out. What was the initial reaction? Boom, big rally. on the number. Love it. And then the market pulls all the way back because sellers are still aggressive and buyers are just sitting back and watching to see what plays out. That was the tell that the market was going to probe for support before the open. Awesome. That's what we'd like. We want to make sure that there's support just like the institutions do. So before they come in and start scooping this, they want to make sure that we have that defined support level. So now that I'm watching it, what do I want to see and what don't I want to see for that scenario to play out? Well, we have to be super careful, extra careful when we're trying to trade against the trend. So what will I be looking for? Well, I really don't want to get below this level right here. I'd really like to see this support right here hold. Will it? I don't know. What is the character of these candles? We're seeing long-bodied candles, long wicks, long tails. It is pulling back. It is coming in. It is selling off. It's drifting lower. Initially, this looks like we could have a downward sloping trading channel, but these long wicks and tails, they do tell you that buyers and sellers are engaged, okay? Well, how do we know that? Well, look, they tried to smash the market down here, and what happened? Bye, 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 bye. They tried to rally it here. Nice long green candle, looking beautiful, gets to VWAP. Blam! They sell it off. So buyers and sellers are engaged right now, and the volume is pretty decent. Okay, but we don't want to stick our head in the noose because sellers are still seeing this as an opportunity. We got to bounce. I was hoping to sell at a higher level. I'm getting that opportunity. So sell, 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 sell. We've got to let this run its course. I don't want to get down to yesterday's close, which would be right here. I'll drop an alert line there. I don't want to even get close to that. I've got to see support well above it, or if we can get all the way back down to it on good news. We had good news. Europe was up. China was pretty soft, but that was the exception. The rest of the markets were up overnight. The table should be set for a decent rally here. If I start getting close to this close yesterday and filling in that gap completely, it tells me my thesis that there's going to be a market bounce today is flawed. Ain't going to happen. Well, I don't have any money at risk, so I don't really need to worry about it. So right now, I'm only observing, and I know what I want. So I'll be looking for a nice little rally up to VWAP and above. How do I want that rally to happen? I would prefer not to have long candles like this because those could be easily erased, okay? What I would prefer to see off of a low and a higher low double bottom in here is nice little green candle, nice little green candle, nice little green candle, nice little, about 6, 7 of them in a row would be great. Nothing too big, kind of normal sized candles, no big long tails or wicks. That would be a sign of persistent buying. Whoever's out there buying is replenishing their bids. The market can't get smacked down. It's starting to form, and now buyers are getting fairly aggressive because they like the news. And that's going to force shorts to take some profits on their positions. And as they do that, the market will have a chance to continue to move higher. Very important. If I don't see that pattern, if this support level doesn't hold and we come all the way down here, I'm not getting long, okay? I don't care how freaking good the pick is that I show you. I'm not getting long. I am not trading against this market. And I know that the first bounce is going to be vulnerable, so I am not going to stay in it longer than today. It's very important for you to understand this. So with that context, I have to see this 558 support level hold. I have to start seeing those green candles stack, stack, stack. Okay, cool. Now what? Now what? I want to see a stock that was moving higher and that when the market pulled back sharply like this, it did not pull back. It held firm while the market is selling off. Bye bye bye, bye bye bye, bye bye bye. I'm starting to see those buyers come into that stock. That's the stock that's going to move higher. I want to see it on heavy volume. I'd like to see it above the prior day's high. Okay. Is the market above the prior day's high? No, it tried. That's the first line of resistance. So let's go in and take a look at what we've got. I'm going to go into bullish SMA cross right out of the gate. The stock that is above a major moving average. So this is Meta. Yes, this is a deep trough, but look at how nicely Meta has bounced. It's got relative strength. Green line above zero. It's holding that 200-day moving average. Look at how well it's holding up during this market pullback in here. Hey, that's pretty dang nice. It's holding that gap, holding the prior day's high, well above the prior day's high. So everything's in place. So that's one stock that I like, CRWD. Look at how beautiful that is. Oh, baby, not the volume I'd like to see on it. How about Meta? Yeah, Meta had good volume. So I want to see that volume also. And let's look. This is off of my bullish SMA cross search. And let's see where we've got CRWD is above that 200-day moving average beautifully. Look at the rally yesterday. That's a bullish engulfing candle off of that low. This is nice stuff, okay? This stock looks like it's ready to go higher to play for a bounce. Where am I going to find my biggest bounces? Probably off the deepest sell-offs, okay? Ideally, the stock is still above the major moving average like that. So I like CRWD. That is a nice pick. I love that it is holding its own right here. And that tells me that if by chance I start getting into this stock and I'm a little early and the market tests this low again, that I'm not going to have my head handed to me being in CRWD because buyers are in there, okay? So I like that one. This is a pretty decent pullback. This is one of the AI stocks, IONQ. So those look pretty good. I've got two right off the bat. I could end the video right there and pick either one of those two and be good with it. Netflix has been good. It's such an expensive stock, though. Boy, I like that. I like those two. I'm just doing a quick glance here to see what I've got. RDDT, I think that found support yesterday off of that 200-day moving average. So that was pretty nice. It's pulling back a bit today. So I want to see that strength today. It's holding this gap up pretty dang well. Not great volume. Okay. So let's go ahead and conduct a search. I'm just going to First, I'll take a look and see if there's anything else in some of my other searches. You'll see that the bullish searches don't have a lot of candidates, and that's for good reason. The market has sold off hard. All right, let's go in and do a search here, and we're going to keep an eye on this bullish SMA cross. CRWD right now is probably the stock that I would want, and I would want to see it above this high. But right now, everything is it's all systems go on it as far as I'm concerned. I do like Meta also. So what do I want to do? I want to go in end of day. I'm not going to use GTC. I'm just going to use an end of day alert. I could also right click, create alert, go in. This video is getting longer. I'm sorry, folks, but there's a lot for me to cover. So I want to see above VWAP on a 5-minute basis. That alert is set. When we get above VWAP, I'm going to get a alert. And there we can see CRWD is holding. Yeah, just for volume's sake, I don't like CRWD. So when we go into custom search, one of the first things I'm going to be looking for is relative volume today. It's got to be above 1.2. That would be 20% greater than normal. I'm going to go in and look for great option liquidity. And I'm going to cast a wide net. I'm going to look for a stock that is greater than the prior day's high and to see what this returns. Lots of results. Ooh, NVIDIA's in there. That's cool. Let's see what that's doing. BA is in there. Market drifting lower. The beauty of this is that I have time to put my game plan together. This is not a gap and go. And this is why a gap reversal actually give us a little more time. I just don't want more than half of that gain to be given up. So anyway, yes, I've got some pretty nice looking stocks in here, but let's see if I can draw that in a little closer. Maybe there's an SMA cross. See what that does. All right, that gets me back to the same handful of stocks, but they do have pretty decent volume. So I'm going to take a look at Groupon. That's not one I trade very often, but let's see what it's doing. Oh, big gap up, big news. That probably, yeah, that was a post-earnings place. I'm going to avoid that. All right, let's go back to the drawing board and let's take off that bullish SMA cross, and let's see if we've got something with relative strength on a D1 basis. Now our list is smaller. You can see, very easy. I can ratchet this up to get more option liquidity. And I'm going to take a look at NVIDIA. How can you not look at NVIDIA when it's on the list? Oracle, Shop. All right, I'm going to pick out some of the bigger names I'm familiar with. Let's go to NVIDIA and see what that's doing. Everybody likes NVIDIA. Who doesn't like NVIDIA? All right, so this still got to get above AVWAP E. I like this move here. What's the volume look like? It's holding up very well. So, I mean, I could make an argument to get long NVIDIA today based on what I feel the market's going to do because it's holding this gap up very nicely. RDDT. Again, these are coming up on decent volume searches. Oracle, little pop up, holding its own, but look at this gap did not fill. So I'm not crazy about that. Yeah, I can find better. It's not horrible. CLF, this would actually do very well based on, oh, geez. How can you pass up on this? Okay, this is it, folks. This is what we look for. Here's the search. This is what I would buy. I'd buy it right now, too. Wouldn't you? Wait. This is going to be a good one. So you got greater than prior day high. You have good option liquidity, good relative volume, good D1 strength. And now we've just gone through everything. And look at this stock march higher. Here's another search variable I can use. New high of the day. Boom. New high of the day. Boom. One candidate. CLF. That's how you get to it very quickly. CLF is going to be your pick of the day. I love this price action. Did you see how easy it was for me to find that? I just have to know what I'm looking for. And now I have to wait for the market to set up properly for me. And I've got that support is holding, but I'm not going to be early. I don't need to be early. Okay. If I'm going to be early, this is the stock to do it on. And so if I felt that support was starting to build here, I could just buy a handful of shares. I don't have to buy many. I can just do a starter position. And then as I have confirmation, I can add to that position. And I'll be looking to do the same with Meta. Meta had really nice volume also. Crowd didn't have as much. So I like Meta. I like the fact that it's holding up here. When I start to see the market move higher, what do I want to see Meta do? Boom. Right up. When the market's down and drifting lower and lower and lower, what do I want to see Meta do? I want to see it ticking higher. Market down, stock higher. That tells me buyers are there. So CLF, I've got that type of price action. And what I can also do is I can go in, I'm going to remove the high day criteria because this is going to greatly limit the number of stocks that I have. I can go in and, hey, show me a stock that's got really nice movement. 80x is bullish on a 5-minute basis. This is going to tell me that the stock is chugging higher. Let's take a look at a couple of those just to give you a little different look and feel. And we'll see if anything else. Micron, MU. RDDT also looks pretty good. Look at that slide and look at that little pullback and hold, hold, hold. And we had good volume in RDT2. It's bouncing off this 200-day moving average. It has room to get to the 100-day moving average. I like that. VKTX. And it's just been in a long-term downtrend, so I'm not crazy about that. Which, by the way, I'm not looking for stocks that are in a long-term downtrend. I want to see stocks that just drop because the market was dropping and that found support above major support levels. So buyers are engaged to a much higher degree than they are in the overall market. So CLF, that is your bullish pick. I think they'll also do well just based on the fact that they're a North American company and that there are steel tariffs going in. I'm sure that that's why the stock is popping this morning. And you can see that it's trying to get through the open from March 10th, 2 days ago. So let's put that 15-minute chart up. That is your first resistance level. And look, we've got SPY drifting lower. No worry, I'm setting alerts. Do I have any emotional attachment to what's going on right now? No. I don't have a position on. I'm just setting alerts. So let the market come in. If the market comes in all the way to this point, I'm not trading from the bullish side, okay? I'm not doing anything. So I'll just simply wait for market support, and I'll wait and I'll wait, and I'm not going to buy CLF no matter how good it looks until I have the market pattern that I want. And then, and only then, will I even consider CLF. And I want to make sure that it is able to get through some of these resistance levels. So what I'll be doing is I'll set an alert here. That's going to be your first resistance is at $10, okay? Then I'm going to set another alert right here. And I'm going to set that, and it's probably about $10.40. Those are the resistance levels that I want to see the stock power through. If it can't do that, then I'll just add a small position. I'll keep adding. I won't add until it gets through that first resistance level. And when it does, I want to see the market powering higher. I want to see good volume in CLF, and I want to see it obliterate those resistance levels with ease. When I see that, I know that buyers are engaged, buyers are interested. And when I know that they're interested, when I know they're motivated, that's when my odds of predicting future price movement are at their highest. If this content is helping you, if you've been making money on my previous picks, I hope you've been trading them. If you've been trading them, you've been making money. Please give this video a thumbs up. Help me reach more traders, and we will see you in Sunday's video. By the way, I'm going to have a link in this video because Harry from our chat room, he likes to do his X live events. So he'll be doing one around noon, 1 o'clock Eastern time. So I'll make sure and have that link up. You can also hear what he's got to say and what his take is on the market today. Thanks so much for watching. We will see you Sunday.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.